So this is the last part of the current module 2 devoted to blockchain technology. And now let me share with you the journey of payment systems transformation. And we will examine how traditional payment methods have given way to digital alternatives and why this shift is fundamentally changing the financial landscape. And I will try to walk you through the key technological breakthroughs and emerging trends and future scenarios that are shaping the payment industry. Throughout this lecture, I'll be highlighting the most significant developments in digital payments, including mobile wallets, instant payments, cryptocurrency, and also central bank digital currencies. And we'll also discuss how these innovations are affecting businesses, consumers, and the global economy. Let me take you on a journey through the history of payments, first of all, and starting from the very beginning. For example, when I think about how far we've come, it's to consider that our ancestors began with simple bartering systems around 10,000 years before the Christ era. And I want you to imagine a world where people, for example, traded livestock, shells, and other commodities directly from the goods they needed. And this system of bartering and using commodity money persisted for thousands of years, but a significant breakthrough came between 1000 and 600. And when standardized coins emerged in China and Asia. And this was a revolutionary development because for the first time, people had a uniform medium of exchange that everyone agreed upon. And what I find interesting here is that it wasn't until around 800 years that paper money started circulating in China. And you can think about that. It took humanity nearly about 1,400 years after the invention of coins in order to develop and trust paper as a form of currency. And this shows us how deeply ingrained the concept of intrinsic value was in early payment systems. And these early innovations laid the groundwork for everything we will discuss today about modern digital payments. Now let's fast forward to what I consider one of the most transformative periods in payment history. In 1851, we saw the founding of Western Union. And this is particularly significant because it wasn't just about creating a telegraph system. It represented the first major step toward building an interconnected payment network that could transfer value almost instantly across long distances. And I want to draw your attention to the 1920s, when we saw the emergence of something quite revolutionary, like charge cards. And these were initially used by individual stores, hotels, and businesses. And this was the first time in history that consumers could make purchases without immediately exchanging physical currency. And a pivotal moment came in 1950 when, with the launch of Diners Club, the world's first credit card. And what makes this so interesting is there was the first time a third party stepped between merchants and consumers to facilitate payments. And then during the 1950s and 60s, we witnessed the establishment of the payment giants we all know today, like Visa, MasterCard, and American Express. And looking at this evolution, you can see how each innovation built upon the previous one created increasingly sophisticated payment networks. And these developments laid the crucial foundation for the digital payment systems we use today. And now let me share with you what I consider to be one of the most transitions in payment history: the move to digital and mobile payments. And what's about this period is how quickly technology transformed the way we pay for goods and services. And you might be interested to know that one of the first significant milestones in e-commerce was when Pizza Hut launched online purchasing on their website. And this might seem trivial now, but it was revolutionary at that time, because imagine being able to order and pay for pizza without picking up the phone. And this was followed by the emergence of groundbreaking services like PayPal and internet-only banks like ING Direct, for example, with which fundamentally changed how we think about money transfers and banking. And then came what I believe to be the real game changer, like mobile payments. And it started with pilot projects in the early 2000s. But the real revolution happened with the introduction of services like Apple Pay, Google Pay, and Samsung Pay. And these platforms essentially turned our phones into digital wallets. And when we look at the transformation of payments in the 2000s, I'm struck by the sheer pace and scale of change, actually, because this was truly a revolutionary decade that reshaped how we think about and handle money. So let me explain why this period was so significant. It was just about the introduction of new technologies. It was about fundamental shift in consumer behavior and business models. And for example, we saw the emergence of digital first payment solutions that completely transformed the traditional banking landscape. And what I find interesting about this era is how it democratized financial services, because suddenly anyone with a smartphone could access sophisticated payment services that were previously only available through traditional banking relationships. And for example, we saw the rise of peer-to-peer payments and digital wallets and mobile banking applications that made financial transactions more accessible than ever before. And the next slide. And now let me share some statistics that demonstrate the momentum of instant payment adoption globally. So what I find interesting is the dramatic growth rates we are seeing across different regions. For example, take Denmark, for example. They have experienced a 35% growth in instant payment volumes. And even more impressive is Sweden and Mexico as well, where growth was exceeded 60% within just 4 years of launching their systems. And these numbers aren't just statistics, because they represent a fundamental shift in how people expect money to move. And I want to highlight some particularly successful implementations that are driving the rapid adoption. For example, Singapore's Pay Now system, or India's UPI, which is Unified Payment Interface, and various initiatives across the European Union are setting new standards for instant payments. And what makes this system so successful is, in my view, is the ability to combine speed with security and accessibility. And what excites me most about the current payment landscape is the explosive growth we are seeing in alternative payment methods. And let me share some figures that illustrate this trend. When I look at buy now, pay later, for example, or BNPL services, the numbers are staggering. For example, global transaction values are expected to reach $995 billion by the current year, by the next year, sorry, 2026. And this isn't just about offering credit, it's about reimagining how customers manage their purchasing power and cash flow also. And here, what I find interesting telling, 90% of customers who were using cash or checks before the pandemic now expect to use more digital payments going forward. And this represents a massive shift in consumer behavior that I believe will be permanent. And the pandemic hasn't just accelerated digital adoption, so it's fundamentally changed payment preferences. And for example, let's talk about QR code payments. So they have achieved a transaction value of 300 billion in 2022. And what fascinates me about this technology is its simplicity and accessibility, because it requires minimal infrastructure, yet provides a seamless payment experience. And this is particularly important in emerging markets where traditional payment infrastructure might be lacking, for example. And looking at this timeline on the slide of digital payments evolution, so I'm struck by how each innovation is built upon previous developments to create increasingly sophisticated payment systems. And let me walk you through what I see as the key evolutionary stages. And what fascinates me about this progression is how we have moved from simple digital transactions to complex integrated payment ecosystems. And for example, when I analyze this evolution, I notice that each new development has made payments faster, more convenient, and more accessible to a broader range of users. And I want to pay your particular attention to how the pace of innovation has accelerated in recent years, and what used to take decades to evolve now transforms in just a few years. And this acceleration isn't just about technology, it's about changing consumer expectations and business models. And when I look at the payments landscape, I see disruption happening on multiple fronts simultaneously. And I want to emphasize why this is so significant for all of us in the industry. And what makes this period particularly is what we are not just dealing with technological disruption, although that's certainly a major factor. We are seeing fundamental changes in consumer behavior, in regulatory frameworks, and in business models, all happening at the same time. And here, I'd like to point out that traditional payment providers are facing challenges from multiple directions, like fintech startups, big tech companies, and even retailers which are entering the payment space. And what I find most interesting is how these new entrants are not just competing on price or efficiency. They are reimagining the entire payment experience. And now, by this slide, I would like to draw your attention to what I consider the most significant payment innovations we've seen in the last 5 years. So what makes this period particularly is how mobile technology and enhanced connectivity have transformed the way we think about payments. And for example, when I analyze these recent innovations, what strikes me most is that they are not just about moving money, they are about creating entirely new value propositions. And these solutions are leveraging the ubiquity of smartphones and a high-speed internet to make payments not just simpler, but smarter. And let me emphasize something crucial here. Successful innovations in this space have managed to overcome two major challenges simultaneously. First, they have simplified the user experience to the point where payments become almost invisible. And second, they've added layers of value, whether through rewards, data insights or integration with other services. Next slide. And what I find interesting here is that successful payment innovations aren't just about technology. They embody a specific set of characteristics that make them particularly appealing to users and sustainable for providers. And from my analysis, these successful innovations consistently demonstrate a combination of seamless user experience and robust security and clear value proposition as well. And now let me tell you what I believe is most crucial here, like successful payment innovations solve real problems for users while creating new opportunities for businesses. And they don't just digitize existing processes, they in turn reimagine them entirely. And in my experience, for example, the most successful solutions are those that manage to balance innovation and reliability and simplicity and sophistication. And now let me explain why I believe cloud migration is absolutely crucial for the future of banking and payment networks. What I find interesting, compelling about this transition is that it's driven by several key factors. First and foremost, we are seeing that core banking platform and payments as a service investments are being propelled by the need to enable alternative payments. But it's not just about new payment methods. It's also about maintaining technological currency, maintaining standardization, and most importantly, interoperability. And here what's really excites me about this shift is modern cloud-based infrastructure opens up entirely new possibilities for leveraging data. And when banks, for example, move to the cloud, they're not just modernizing their technology stack, they're creating new opportunities for personalization and also innovation. And here, the ability to use APIs and microservices architecture means banks here can rapidly deploy new services and integrate with fintech partners. And by this slide, I would like to discuss how data analytics and artificial intelligence are transforming the payments landscape. As we move forward, personalization and data insights become crucial differentiators in our industry. And now let me highlight three key aspects of this transformation. First, while transaction processing is becoming commoditized, the real value here lies in leveraging analytics over aggregated data. And this is where the future of differentiation lies. And what is particularly interesting is how we are seeing increased transparency for customers. For example, through AI and machine learning, we can now provide tailored recommendations and valuable insights, such as accurate cash flow predictions, for instance. And I've observed also that those who successfully implement personalization strategies are seeing significantly higher customer engagement rates, and the ability to analyze payment patterns and provide personalized services is becoming really a game changer. Well, the next slide. Looking at this chart on the slide, I want to share with you how banks are currently positioned in terms of leveraging their data assets. And what we're seeing here is quite revealing about the industry's digital maturity. Well, at the top of our maturity scale, we have what I would call the pioneers, which is 18% of firms that are really leading the way. And these organizations not only view data as a strategic asset, but are currently actively sharing it with the third parties in order to create additional value. And this is truly cutting edge in our industry. And moving down to the scale, we find that 27% of firms have taken significant steps forward by leveraging external data to enhance, in order to enhance their customer experience. And from my experience, this approach is particularly effective in creating more comprehensive customer profiles and better service offerings. And what I find interesting here is that 40% of firms, the largest segment, are focusing on utilizing their internal data. And while this is a good starting point, I believe there is still significant untapped potential in external data integration. And perhaps most concerning is that 15% of firms are still not utilizing their transactional data at all. For example, in today's digital economy, this represents a significant missed opportunity because these institutions risk falling behind the industry continues to evolve. And now let me share some developments in the payment aggregation space that are fundamentally changing how we think about customer connectivity and value creation. And hereby, I want to highlight an example, which is Plate, a company that has achieved a 13 billion valuation. So what's about their success is how they have leveraged payment aggregation capabilities to create unprecedented connectivity. For example, they now connect over 11,000 banks and they handle more than $1 trillion in transaction volume annually. And this really demonstrates the immense value potential in this space. And what I find interesting and what I want you to understand is how account aggregation is evolving, because it's not just about connecting accounts anymore when we supplement this with transaction data enrichment. And we are creating powerful new gateways to customer engagement. And from my experience working with financial institutions, I've observed that these aggregation capabilities are becoming crucial competitive differentiators. And now I want to share some insights about central bank digital currencies, or CBDCs, and tell you why they are becoming increasingly important in our global financial system. According to recent research from the Bank of International Settlements, approximately 60% of central banks worldwide are actively exploring CBDCs. And this isn't just a trend, it's a fundamental shift in how we think about national payment infrastructures. And now let me highlight 4 key aspects that I believe are crucial to understand. First, the different technology approaches being considered for retail versus wholesale CBDCs. For example, from my experience working with financial institutions, I can tell you that these distinctions are critical for implementation strategies. What I find interesting is the potential of tokenized programmable variants. And this could enable smart contracts, for example, which essentially automate agreements and transactions. And this is truly revolutionary for the future of money. However, I must point out that this transformation won't be without challenges, because one of the most significant considerations is the potential impact on commercial banks. And we are likely to see substantial changes in how deposit servicing and lending operate. And also, the next slide. And now let me share my perspective on how cryptocurrencies and stable coins are reshaping the global payments landscape. And this is a topic that generates a lot of discussion in our industry, and for good reason. From what I've observed in the market, while cryptocurrencies offer significant advantages in terms of disintermediation, their adoption remains rather volatile. And this volatility is one of the key challenges that has been holding back widespread adoption in mainstream payment systems. However, what I find interesting, promising, is the evolution of asset-linked stablecoins, because these instruments are designed to address the volatility issue by maintaining a stable value linked to traditional assets. And in my view, this development could be a game changer for the industry. And let me explain why this matters. As stable coins mature and their volatility risk decreases, we are likely to see expanded adoption across different payment use cases. And this could provide an entirely new rail for global money movements that combine the benefits of blockchain technology and the stability of traditional assets. And by this slide, I would like to share some statistics about the adoption of modern payment methods across different markets. What we are seeing is quite in terms of how different technologies are being embraced around the world. First of all, let me start with the contactless cards. The data shows that it took between 8 to 15 years to tap and go cards to reach adoption rates of 60 up to 95% across leading markets. And this relatively long adoption curve tells us something important about how payment. And what I find interesting is the adoption rate of accounts which are based on real-time payment. In just 4 years, the systems achieved double-digit adoption rates, and this rapid uptake suggests a strong market appetite for instant payment solutions. However, what's most to me is what we are seeing in emerging markets. And in these regions, mobile money has actually been adopted faster than traditional card payments. And this isn't just about consumer preference. Of course, it's about infrastructure constraints driving innovation. The next slide. And now I want to walk you through a view of how banks are strategically planning to enhance their payment profitability. And for example, you can see at this diagram on the slide, and it reveals some compelling trends across business strategy, operating models, and technology considerations. Let's start with what I find most striking, which is 52% of banks are planning to invest in third-party products and offerings to develop innovative propositions. And this is the highest percentage we see on the chart, and it tells us something important about the industry's direction. And in terms of the operating models, 45% of banks are looking to orchestrate an API-based ecosystem and move towards a platform-based business model as well. For example, from my experience, this shift represents a fundamental transformation in how banks approach their payment service. Now, let me share with you some insights from McKinsey's research about the trajectory of global payments revenue. And what we're seeing here is a compelling story of resilience and growth. First, let me draw your attention to what happened in 2020. The industry experienced a 5% decline in global payments revenue, dropping to $1.9 trillion. And this was unprecedented, but what's most interesting is how quickly the market began to recover. And looking at the regional breakdown, APAC, APAC continues to be the powerhouse of growth, starting from 0.5 trillion in 2011 and projected to reach 1.3 trillion by the end of the current year. And from my experience analyzing these markets, this growth is driven by rapid digitalization and increasing financial inclusion. And looking ahead to 2025, the end of the year, we are projecting a return to historical growth rates of 6 to 7% annually, pushing the global revenue to approximately $2.6 trillion. And in my view, this represents not just recovery, but transformation also, as new payment technologies and methods drive growth. And now I would like to discuss some revenue opportunities that are emerging in the payments industry, particularly in commerce establishment and adjacent services as well. And the numbers we're seeing are quite well. Let me share a striking figure with you. We are looking at over $200 billion in addressable revenue potential. And this isn't just theoretical, because these opportunities are emerging from real services like commerce enablement or fraud mitigation and digital identity solutions as well. And from my experience, these areas represent some of the most promising growth factors in our industry. And what I find interesting is that providers now have the potential to capture a 50% higher share of merchant IT budgets. And this is a significant shift from the traditional payment processing model, and it's happening through value-added offerings. And let me put this in perspective. When we talk about commerce enablement and payments enhancement services, we're not just talking about processing transactions anymore. We're talking about creating an entire ecosystem of services that help merchants run their businesses more effectively. And now let me walk you through some trends we're seeing in emerging payment methods. And what is particularly interesting here is the significant gap between current usage and future adoption intentions. Let's start with Buy Now, Pay Later, or BNPL. Currently, about 20% of customers use this service, but look at the projected adoption. Around 60% plan to use it in the next couple of years. And from my experience, the surge is driven by about 40% of customers who are actively seeking alternatives to high credit card charges. And what I find intriguing is the invisible payment category. While less than 10% currently use this technology, over 45% expect to adopt it soon. This is directly addressing a pain point where more than 30% of customers report high friction in payment checkout process. And looking at the biometric payments, for example, we see similar dynamics. Current adoption is around 10%, but future intention is about 50%. And what's driving this? Well, over 50% of customers are concerned about transaction privacy and are seeking better authentication solutions. And finally, cryptocurrency payments show an interesting pattern. For example, while current adoption is below 10%, over 45% express interest in future use. And this is particularly relevant given the 35% of customers are facing challenges with cross-border payments and high transaction fees. And in my view, these trends clearly indicate a significant shift in payment preferences driven by specific consumer pain points rather than just. With this slide, I would like to discuss three critical developments in the evolution of payment systems and interoperability that are reshaping how we think about cross-border payments. First, let's talk about instant payments adoption. And what we are seeing in expansion at the domestic level is, for example, from my experience working with financial institutions, this domestic growth is laying the crucial foundation for international connectivity. And the second key element, which I find particularly fascinating, is interoperability. And this is really about enabling effective global money movement. And for example, we're seeing initiatives like P27 and the Nordic region leading the way and creating seamless cross-border payments capabilities. And what I consider most of that is what I call the next frontier, which is the drive for compatibility, especially between different payment message formats. For example, the adoption of ISO 20022, in my opinion, is playing a crucial role here, essentially creating a universal language for payment systems worldwide. And now let me emphasize why this matters. For example, when we connect clearing and settlement capabilities across borders, we are not just making payments faster, we are fundamentally transforming how money moves around the world. And therefore, the impact on business and commerce is profound. And in my view, these developments represent one of the most significant transformations in the history of global payments infrastructure. Well, now let me, I would like to share with you some developments in how government-backed mobile money initiatives are revolutionizing financial inclusion across developing economies. And now let me highlight some particularly successful examples. For example, systems like M-Pesa in Kenya or PromptPay in Thailand and India Stack in India, therefore, have achieved extraordinary results in expanding financial access. And what makes these initiatives so successful is their leveraging of mobile phone infrastructure. And what I find interesting about this trend is how mobile technology is being used to leapfrog traditional banking infrastructure. And for example, instead of building physical bank branches, these countries are putting banking services directly into people's phones. And from my experience, I've observed that the key to success here lies in the government backing. And for example, this provides the necessary regulatory support and builds public trust in these systems. Excuse me. And also, I think that this impact is truly transformative because we are seeing rapid adoption rates in countries where, for example, traditional banking services were once limited or inaccessible at all. And this is particularly important when you consider the mobile phones. Those have far greater penetration than traditional banking infrastructure in these regions. And also, I believe this approach represents one of the most effective strategies for advancing financial inclusion in developing economies. The next slide. Overall, it is estimated over 1.7 billion adults globally still remain unbanked currently. And I would like to draw your attention to a critical global financial inclusion challenge that we face, according to the title of the slide. That is the unbanked population worldwide. So let me show you the striking regional disparities in financial inclusion across different parts of the world. And for example, looking at this map, we can see dramatic differences between developed and developing regions. For example, in high-income OECD countries, only 8% of adults are unbanked, and that's about 60 million people. However, the situation is very different in other regions. And what is interesting concerning, for example, sub-Saharan Africa, where 80% of adults, approximately 326 million people, remain unbanked. And this is followed by the Middle East at 67% or 136 million adults. And for example, Latin America at 65% or 250 million adults, and various parts of Asia ranging from 49 up to 59 percent of unbanked population. And these statistics tell us something very important about the digital payments landscape. And there is an enormous untapped potential for financial services in developing regions. And for example, when I consider these numbers, I see both a challenge and an opportunity for fintech innovation in these regions. And frankly speaking, studying financial inclusion, I've observed that mobile technology and digital payments are becoming key drivers in bringing banking services to the unbanked populations. And this is particularly evident in regions like, for example, East Asia and Southeast Asia, where, despite having large unbanked populations, we are seeing rapid adoption of mobile payment solutions. And let me also emphasize that understanding these geographical disparities is really crucial for anyone working in digital payments, as it helps identify where the greatest opportunities for growth and social impact lie. The next slide. By this, I would like to discuss an important shift happening in payment business models. That is the move towards subscription-based pricing in banking and financial services. And this diagram you can see on the slide illustrates the fundamental concept behind subscription payments. And what we are seeing here is a transformation in how financial institutions monetize their services. And for example, instead of relying solely on traditional transaction fees, banks are increasingly adopting subscription models where, for example, customers pay a regular fee for a bundle of services. And by this, let me explain how this works. So as you can see in the diagram, there's a continuous flow between the company and the customer. And the company provides ongoing products or services while the customer makes periodic payments. And this also creates a predictable revenue stream to the company. And for example, in my analysis of current market trends, I've noticed that this is particularly relevant as we face increasing pressure on transaction margins. For example, banks are looking for new ways to maintain profitability, and subscription models offer a compelling solution, as to my opinion. And what is particularly interesting is how interchange fee structures are evolving alongside these new models. Because, for example, we are seeing a reemergence of fee pass-through strategies, and for example, where interchange costs are more transparently shared with consumers. And from my research, I can tell you that this shift isn't about the revenue. It's about creating more sustainable and transparent pricing models that, for example, better aligned with how modern consumers use financial services. Next slide. Well, now let me share with you some developments in the payments industries and M&A landscape. Recent market activity tells us a compelling story about where the industry is heading. For example, I've been closely tracking major acquisitions in the space, and there are three key areas that stand out. First, we're seeing significant interest in buy now, pay later, or BNPL capabilities. For example, you can take the Afterpay acquisition, for example, and this reflects the growing importance of flexible payment options in modern commerce. And another trend I'm particularly excited about is the increased focus on global remittances, um, also exemplified by deals involving companies like Wise. And as to me, this shows how the industry responded to the growing demand for efficient cross-border payment solutions. And what I find here most intriguing is the strong emphasis on banking-enabled technologies. And for example, the acquisition of companies like Amount, as to me, highlights how traditional financial institutions are prioritizing digital transformation through also banking as a service capabilities. And based on my experience, I can tell you that these M&A partners aren't random. So because they reflect a strategic shift in how payment companies are positioning themselves for the future, because they are not just buying technology. They are, as to my opinion, they are acquiring capability that will define the next generation of payment services. And looking ahead, I also expect this trend to continue as, say, payment companies seek to build comprehensive platforms that can handle everything from commerce enablement to cross-border transactions seamlessly. Next slide. And hereby, I would like to discuss how digital banking challenges are revolutionizing payment experiences by means of leveraging real-time payment infrastructure. Now, let me share some concrete examples that illustrate this transformation. I've been saying, and also as a result of my study in cases like Revolut or Current and Aspiration, I've been saying that these challenges are doing something really interesting. And as to me, they are not just offering banking services, but they are fundamentally reimagining how payments work in our daily lives. And what makes these challenges particularly is how they are integrated with faster real-time payments or RTP networks. And for example, in my analysis, I found that they're using this connectivity in order to create unique value propositions that, say, traditional banks simply can't match. And now let me give you some specific examples of the innovations they are bringing to market. Like, for example, instant peer-to-peer transfers or early access to payroll or immediate deposit availability and also real-time rewards. And I think that these features are completely changing customer expectations about banking and payments. And what I find the most compelling about this trend is how these challengers are providing that modern payment infrastructure isn't just about speed, it's about creating entirely new types of financial experiences that resonate with today's consumers. Next slide. And now I would like to explore how open finance APIs are creating new revenue streams in the payments industry. And let me share some insights from my research. For example, according to Finastra's data, which I find particularly telling, 85% of customers are now open to, say, sharing their financial data. And this represents a fundamental shift in consumer attitudes toward data sharing. And it's creating unprecedented opportunities for payment firms. And what I find most about this trend is how it's transforming the traditional payments business model, because through customer consent-based data sharing, I think payment firms can now monetize data in ways that weren't possible before. And also, let me explain why this matters. For example, when customers grant consent for their data to be accessed through APIs, payment firms can analyze spending patterns of these customers, and they can predict financial behavior and create, therefore, personalized financial products. And this isn't just about processing transactions anymore. It's about delivering value through data-driven insights. And now let me share with you a development in payment technology that's transforming how we interact with everyday devices. And we're seeing a convergence of payments and the Internet of Things here. What you see on this diagram on the slide is the modern payment ecosystem that enables embedded payments. From the end user through various layers of technology and security, and all the way to card networks and banks. And the key innovation here is how software can now integrate payments directly into our connected devices, whether it's your smart appliance, transportation system, or even entertainment devices. And this isn't just theoretical, it's happening right now. And also, I find it particularly interesting that just the mobile sector alone is projected to generate over $400 billion in payment transaction value by 2030, according to Juniper research. And that's a staggering figure that shows the scale of this transformation. And now, let's discuss a critical aspect of payment technology that's undergoing significant transformation. That is security and fraud prevention. And this is an area I'm particularly passionate about because it directly impacts our trust and system integrity. What's really is the shift we are seeing in investment priorities, for example, because according to the TPG report, biometric security is expected to receive more than 4 times the current investment by 2026. And why such a dramatic increase? You can ask, well, we're moving well beyond these fingerprints. And for example, in my view, one of the most developments in this space is the emergence of so-called homomorphic encryption. Now I know that's quite a mouthful, but let me explain why it's so important. This technology allows us to perform calculations on encrypted data without decrypting it first. For example, you can think about what this means for open banking APIs. We can now analyze and process sensitive financial data while keeping it encrypted throughout the entire process. And as to me, this is a game changer for both security and privacy. And the beauty of these advances is how they solve multiple challenges simultaneously. For example, biometric make authentication more secure, yet more convenient for users, while homomorphic encryption helps us fight fraud without compromising consumer privacy. And by this, I would like to share with you a global transformation that's happening in the world of central banking. And as to me, this map you can see on the slide represent the current state of central bank digital currency, or CBDC, development worldwide. And what I find interesting, striking, is that we are tracking 131 countries and currency unions also. And the level of engagement is remarkable because, for example, let me break down what we are seeing. That is 11 countries have already launched their CBDCs, and 21 are in pilot phase, and 33 are in development, and also 46 are in research phase. And for example, the color coding on the map tells us interesting story because, for example, the pink areas show launched CBDCs, while green shows pilot projects, and turquoise indicates development stage, and blue represents research phase here. And there are also gold areas showing inactive projects and a couple of red spots for canceled initiatives. And now let me walk you through what I consider to be the three critical investment areas that are reshaping the merchant acquiring business. And this is particularly relevant as we are seeing a significant transformation in how acquirers operate and deliver value. For example, recent market activity has been quite telling, as to me, because we've seen notable deals that highlight where the industry is hidden. For instance, Pine Labs has been investing heavily in QR enablement, while companies like FIS and Fiserv are doubling down on analytics capabilities. And what is interesting here is WEX strategy move toward platform cloud migration. And this isn't just about cost saving, it's about creating a foundation for future innovation and scalability. And as to my opinion, these investments serve three critical and crucial purposes that I want to emphasize. First, they allow acquirers to scale their products flexibly across different channels. Second, they enable the leveraging of richer data for better decision making. And third, they create more seamless integration possibilities through standardized APIs. Next slide. By this, I would like to discuss some developments at the intersection of traditional payments and emerging digital technologies. Nowadays, we are seeing convergence between established payment systems and new digital frontiers. For example, let's look at some concrete examples. For example, PayPal's crypto rollout has been particularly interesting, and Visa's partnerships in this space demonstrate how existing payment infrastructure can bridge the gap to digital assets also. And these aren't just experiments because they are strategic moves leveraging established payment networks connectivity advantages. And what is interesting is how this convergence is happening across different digital asset classes, because it's not just about cryptocurrency anymore. We are seeing integration with various Web3 applications and metaverse platforms. And also the potential here is enormous when you say consider what we're building bridges to connect with the next billion digital consumers, because this isn't just about serving existing users differently, it's about expanding the entire payment ecosystem. And now I'd like to share with you some predictions about the future of payments that I believe will fundamentally change how we think about transactions. First, and this is something I'm quite confident about, we are moving toward a future where the vast majority of payments will be digitized. For example, physical plastic cards as we know them today will become increasingly obsolete. And this isn't just a trend, it's a fundamental shift in payment technology. And another interesting prediction is about mobile wallets. For example, contrary to what some might expect, we are not likely to see one domino from the mobile wallet emerge. So in fact, I predict that NFC technology, which is currently prevalent, will eventually be replaced by newer, more advanced technology. And what is interesting and intriguing here is the growing role of biometrics also, because we're moving toward a future where more transactions will be verified using sophisticated biometric methods like retinal scanning, for example, and this isn't science fiction anymore. It's becoming reality nowadays. And by this slide, let me share another set of compelling forecasts that I believe will reshape the payment landscape in the coming years. For example, one trend I'm particularly excited about is the evolution of in-app payment buttons. And these are becoming the new standard for digital transactions, for example. And you can think about how seamlessly they integrate into our digital experiences. This is just the beginning. And another development is the wider adoption of pay buttons, like what we see with Amazon, for example. But what's really interesting is how this technology is expanding beyond simple e-commerce, because we are seeing these payment solutions become more sophisticated and context-aware. And for example, in my view, one of the most significant shifts will be in merchant behavior, because we are going to see more merchants embracing negative purchase options and auto ship features, because this is what making recurrent transactions completely seamless for consumers, for you, and for me also. And perhaps most importantly, I predict that plastic cards will ultimately be tokenized. And this isn't just a technical change, it's a fundamental transformation in how we think about payment credentials and security. Well, at the end of the lecture, now let me summarize the key points from today's discussion about the evolution and future of digital payments. And there are several crucial trends and developments that I want you to take away from this lecture. First, consider the journey of digital payments. From ancient commodity-based exchanges to today's instant and real-time money movement systems. Because this evolution shows us how payment technologies continuously adapt to meet society's needs. And what is interesting and significant here is the shift we are seeing in revenue models. For example, the industry is moving away from simple transaction fees to value-added services and analytics-based personalization. And this is where the future growth opportunities lie. And I want to emphasize also the importance of platformization through cloud technology and open banking. While this drive innovation, they also introduce new risks that need to be managed carefully. And for example, looking at emerging technology or blockchain or CBDCs, they all promise greater efficiency, but and this is crucial, they require complex transformational processes, because we're not just talking about technical changes, but also institutional and regulatory ones as well. And it's also to observe the regional variations in adoption partners. For instance, in Southeast Asia, partnerships are driving innovation, while in European Union, regulatory frameworks are shaping the landscape. And for example, a key demographic trend I've observed is how younger consumers are accelerating disruption by demanding more flexible and more seamless experiences. And this is fundamentally changing how payment services are designed and delivered. And finally, while the payment sector has shown resilience across economic shocks, we must remain mindful of these rising risks from growing system interdependencies. And this is the balance we must maintain as we move forward. Well, and now let's take a couple of minutes to answer the question. So the question is, which strategic technology investment enables payment networks to combat margin pressures and increase revenue from data monetization and commerce enablement? Please select one of those answers you can see on the slide and put the number of the right answer in the chat. Please take your couple of minutes. Well, let's get back. Yes, you're quite right. The right answer is third. That's great. So let's keep going. And after the class, you can get back to these issues for discussion and think about, for example, how to resolve these problems, these issues. And here is a glossary, as usually.